Let us learn the posting from journal to ledger. How it is done, we will see as far as the accounts are concerned. So, posting of ledger. So, what is posting? Posting is nothing but it is the transfer of information from journal to appropriate accounts. From here, journal is there and here accounts are there. So posting is nothing but we do appropriate posting from journal to specific accounts accordingly, and the entries are being updated in their specific accounts. For example, I'll tell you that how the posting to the ledger takes place. Posting actually refers from transferring the information in a journal entry to appropriate ledger. First you have to mention the date. Second, you have to enter the amount which is in the proper debit or in credit column. And third is nothing but the journal info you have to mention. Right? So I'll tell you how. This is nothing but the standard format of the account for the posting. Here you have to write date, say for example 8 1 2016. What is the particulars you have to mention? Say for example cash. Here is LF. LF is nothing but it is showing the source from where you can say this is nothing but the reference actually, reference of the journal entry, reference of the journal entry from where this entry came. So you can write reference example JP oblique 1. You can have your own reference system. Here amount is to be given, say $50. Second, you can have date, similar date 81. Particulars, say for example what you have used cash to purchase, say for example car. And here that reference from where this journal entry is coming. So you can have your reference as a difference, journal 10 for example, and how much amount, $50 only. So you have to remember this amount should be equal to this amount. So here is actually what we are looking, the T. See, this is the T, right? Right, one side is credit side and another side is debit side. So this is nothing but the posting of accounts. So let us see in detail. So that is nothing but the accounting title. Here is T. One left side is debit side and right side is credit side. So these are ledger accounts. Balance. Difference between the left side and right side is nothing but the at that particular time is nothing but the balance. So assets have left side balances which can be increased by increasing the left side or decreasing the right side. These are two possibilities if you have to manage the balances. Or liabilities and the owner's equity have right side balances. It can be decreased in the left side or increase in the right side. These are two possibilities as far as the owner's equity is concerned. As far as the assets are concerned, you can have these entries. So details of journals and ledgers. So this is journal on page number 1. One side is debit, another side is credit, and here is nothing but the date on which the transaction took place. And these are two accounts which are getting affected. One is cash account and second is the capital account. So this is the garage capital 30,000, cash 30,000. Now here is nothing but the narration which is mentioned. So narration is nothing but the more details you say about that transaction, so that it becomes easy for us to understand. Now what is that? That is received initial investment from the owner. Means owner has given 30,000 rupees in the form of cash for starting business. So this is kind of what's it, journal entry. So posting how it takes place. Insert the number in the journal page. But I told you this is nothing but the reference, date, particular, amount. That is on, this is the T side what I told. One is debit side, another is credit side. So these are recording and posting of an entry. Here if so, analyze and record the transaction, post in on the debit side, post it on the credit side. So this is how the recording takes place. FOL is nothing but the folio. You can have the reference. So prepaid insurance, cash. One amount should be equal to another amount. So that is also very important. Now we'll see the trial balance, how to take in the upcoming slide. Thank you.